Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the Magnificent Seven stocks. There really wasn't any earnings reports that came out this week that interested me. I did get a comment on one of my recent videos to take a look at the cannabis sector, and a person asked me if there's any cannabis stocks I like. So we will talk about marijuana stocks after we go through the Magnificent Seven. So starting off with fear and greed, CNN, fear and greed, we are down in greed, which is between 55 and 75. And with pie vesting, fear and greed, we are still up in greed. We've been up into extreme greed, high greed, really since late November. And you can see that reflected on that's a disclaimer, on the S&P 500 chart. I mean, if you look at the date at the bottom right here, late October, we've just been running up ever since. And I do have Heikin-Ashi candles on. It's a little bit different than your regular candles. That it measures a different unit of time, basically. And we've only had this little red blip. So this has been one of the strongest moves in the market all time. So you do want to be careful. We are up in greed. This moved up over 25% within half a year, which is just crazy. So stock market, it's been pumping. Can it go higher? Possibly. I do have this channel drawn out from prior highs and lows, really going back since the great financial crisis. We seem to be touching the top of this channel, and right now we're above that dotted 50 line. And, if we got super mega bullish, gosh, I got to zoom way down here. You can see there's levels at around 6,500 up there. Now, do I think we're going there? It seems unlikely to me, but you never know. One thing I will note, though, is that when we do have rate cuts, whenever that happens, that tends to signal a local top in the markets. Now, here's 2020, and this red line, that was the first rate cut. Obviously, we had the COVID sell-off dump right there before going back up again. So sometimes we don't go down. Now, 2020, I'm not sure why it tended to be so different than the great financial crisis and the dot-com bubble as far as what happened in here. But if we do go back to these recessions, you can see the dot-com bubble. People were calling it a bubble since here, and it got down to the 100 moving average before pumping back up again. But when we had this first rate cut within a year and a half, 2 years, that was the bottom. This red line, first rate cut within a year and a half, 2 years, that was the bottom. So stock market looking really bullish right now. Oh, God. Stock market looking really bullish right now. Sorry, Mac scroll pad. Sometimes it gets away from me a little bit. And if we go to the VIX, which is the volatility in the markets, we're still at low volatility, relatively speaking. We did just get this little spike because there were some sell-offs happening this week. We'll take a look at the Magnificent Seven stocks, see where those are. But anytime we're 25, 30 and above, those tend to be times that the market is really dipping. I mean, right here, you should know where this is without even knowing the date, is around March 2020 when we had that COVID dump. When we take the volatility of the markets divided by the volatility of the VIX, we get this chart right here. And when it dips, and this happens when you do this ratio, not the other way around, then it would be opposite. When it dips, those tend to be market peaks. When it peaks, those tend to be market dips. So, if you set some buy or sell signals and see that we have a sell signal, then maybe markets are going to start pumping. So just another way to look at it. And again, guys, I can't stress this enough. Technical analysis isn't the only thing. It isn't everything. It's just another tool in your toolbox. Okay. Let's go to the yield curve inversion. So when the Fed raises rates, the yield curve inverts. All right. And we have the US 10-year minus the US 2-year. When it uninverts is when you have to watch out. When it uninverts, that tends to be really close to when the first rate cuts happen, as well as, when I showed you on that S&P chart, it's really close to those lines. So if we go back to the great financial crisis, And the dot-com bubble, you can see here, December 2000 when it uninverted, and June of '07. So December 2000, which was right here, there's a rate cut, and then June of '07. Well, there's July, June. So it happens within those two times a month of the first rate cut. So do watch the yield curve to see when it's going to uninvert, because when it uninverts, that might be signaling a top in the market, at least for a while. Unemployment rate ticked down just a little bit, but overall, it's still macro going up. Of course, it's going to go up and down as it's in this upward trend. So the trend hasn't been broken as far as yet. And a lot of people obviously making jokes online that unemployment's only going down because all of the illegal immigrants and people working 2, 3, 4 jobs. So I haven't looked at the data myself, but sure, why not? Let's go into the Magnificent 7 stocks. First, start off with NVIDIA. And man, when you take a look at any chart, if you don't put it on log scale, things look crazy. So let's put NVIDIA on log. And something I've noted before is when I drew a Fibonacci, and let's go to the weekly. So you draw a fib, which is this tool right here. When you drop from the high to the low, and you get these extensions, notice how we've hit the 1618, and recently it stopped at the 3618. So if we go to the past year, I know it doesn't look like it hit that other area. It did. It had a little resistance, went down to the 20, shot up. But look how close it came to the 3618, right there at around 970. So NVIDIA needs to get through that 970 mark. A lot of people are talking about 1,000. The next level, fib-wise, is around 1118. And if we take a look at, no, I'm not paying right now. Till I get paid from YouTube for ad revenue, I'm not gonna pay for TradingView. 1114 is a 4236. So just something to keep in mind. But NVIDIA, it does have to get through this. Oh, let's just do that right here. It does have to get through this 967 range. Okay, and if we zoom in a little closer, what's it doing? Well, right now it's just chopping around. This does look bearish, but when we go at least to the daily, I don't really like to zoom in more than that, other than to just get a sense of things. But I'm not buying or thinking about buying based off what I see when I zoom in smaller ranges. On the daily, you can look at it possibly going down to the 50, and the 50-day moving average is right near some structure here. So possibly on the daily, it did already sell down a little bit, and we do have some price structure back there. So, hoping it turns around sometime soon. And has a market cap of 2.2 trillion. So I believe it's the number 3 stock in the world. Let me check quick. Google, market cap 1.9 trillion. Amazon, market cap 1.9 trillion. Yeah, so it's right behind Apple and Microsoft. Meta, market cap 1.34 trillion. Anyways, let's go to Microsoft. So Microsoft, as we zoom out, go to the weekly. And NVIDIA, by the way, if you guys are wondering, would I be buying? No, I wouldn't, because we are at yearly highs. I know we have this little sell-off, but unless we had accumulation for a longer period of time, I wouldn't think about it. Here we hit the 100 on the daily. But also, you have to consider this. Since October 22, within the last year and a half, it's gone up 700%. So even if it had a little drawdown on the weekly and came down to like 560, I still wouldn't be buying it. Okay. Now, maybe if it got down to this level, the high 400s, maybe, but I'd have to take a look at the price structure and see what it's doing there, because it could just be going down and then further down. That would be the case, in my opinion, if there's a big recession. So Microsoft, the 1618 is at 434. It's just straight up bullish right now. So Microsoft still going a bit higher. And, whenever we are above all these moving averages, one thing we can do is we can take a look at the bubble risk indicator. Now, Microsoft has been slowly crawling up, so the bubble risk indicator probably isn't too bad. But also the RSI. You can notice here that the RSI is going a little bit lower from where it was. So when we just draw those peaks, we do have this downward line, and this is known as bearish divergence, where the peak from the RSI, you notice how the price went higher, but the strength is going lower. That is bearish divergence. Now, that doesn't mean that the price still can't go higher. But if this trend, let's say goes down again, comes up, goes down, it's overall lower, that is aching for an eventual breakdown sometime down the road. Imminent? I don't believe so, but just something to keep an eye on. Apple. All right, so Apple, the RSI is low. And let's put on our front-running buy-sell signal indicator. By the way, this is the front-running one I use, the 1020 MA crossover with Heikin-Ashi signals. If you want more of a confirming indicator, the UT bot alerts is another one. But I like to get in front of things, so that's why I use the 1020 MA. We haven't had a turnaround on the weekly. On the daily, yeah, we got a buy signal back here. And we are under this fib line. That is the 618. So we are looking for a turnaround on Apple. And right now it is at this fib line, the 618, and the 100 moving average. Look, as we go back, look how rare it is that we go under the 100. Usually we bounce off of it. This was COVID. We bounced off the 100. We went under to the 200. You can see the 200 is the last area of defense unless we go to the great financial crisis, okay, and the dot-com bubble, of course. So, yeah, great financial crisis, you could have got Apple for $3.50, and right now it's at 170. That would have been great. And obviously, not talking about all the stock splits and things such as that, but between the 100 and the 200 tend to be great times to dollar cost average in. So if you dollar cost averaged into Apple right now, I wouldn't blame you. The RSI, I looked at it before, it is still bearish, no signs of a turnaround yet. So you could look for a buy signal because if you don't, this could just turn into a falling knife. Or maybe your thought process is, well, it's Apple. These are historically good times to buy, and I'll take a stab at it. Sure. But obviously, don't invest more than you're able to afford or able to forget about for a while, because right now it is just looking straight bearish. We would have monthly sell signals as well. Yep, we had this little bit of a double top formation here. So Apple, typically when this one starts to show weakness, it's a sign of other bad things coming in the market. We'll see if that still holds true. We do have a different market today than we did in the 2000s. NVIDIA and the semiconductor stocks are leading the charge this time around. But Apple, personally, like if you did dollar cost average in, I would not be blaming you one bit. So that's where we're at with Apple. Amazon, this one's just looking straight bullish. And would it be buy it now? No. I love Amazon, by the way. It's a great product I like and use. If we take a look at the RSI, let's check this out. RSI is straight bullish as well. So Amazon, if you were able to get anywhere in down here underneath the 200 moving average, congratulations. Good job. You're probably liking Amazon. Now, to get to former all-time highs, we do have this 189 level, and should Amazon break through it and we get stupid bullish, you could look at this 255 level at the 1618 as the next area of defense. Next, let's go to Google. And Google, we have recently gotten above those all-time highs. And if we go to the daily, a little bit of a sell down. So watch for these areas of defense. You can see it right here. The 50 gave it a little bounce, and the 200-day, it's bounced off twice. October 23, recently March 24. So watch that 200-day moving average. Maybe we'll come back down there again. If it gets under, then you're zooming out going to the weekly. But Google, overall, in a good uptrend. On the weekly, you can see it likes this 50-week moving average, this gold line. So, and that kind of matches up with the 200-day moving average. Meta Meta looking good and strong. Let's take off this. Let's take off this RSI and on our buy sell signal indicator again. Again, when a stock's running this hot, I wouldn't be buying it right now. I'm willing to be patient. So Meta looking good. And last one, Tesla. Now I've talked to you guys before about Tesla and how or why I won't buy it. Now this is a little bit of a preview into what I'm going to be talking about here in a moment with cannabis stocks. One thing I'll give Tesla that they do well is their balance sheet. Their balance sheet is really strong. That's when you compare their assets to liabilities, extra cash on hand. Their balance sheet looks great. So should there be a big recession, Tesla overall should do well. However, right now, just taking a look at the charts, here's my bearish outlook. I think of companies like Ford and GM, their market cap is around 40, 50 billion. Okay, Tesla is 10 times that. Tesla's been 20 times that before, as you can see, when it was up at like 411. And so I have a hard time me personally, I'm not financial advice for you. I know this is a thing in the future, but when a company is worth 20 times more than those other ones and they have half the revenue, I have a hard time with that personally. So again, maybe Tesla takes over, becomes Ford, GM combined of the future, and you're buying the potential, sure. But just, something to consider whether you are too bullish on it. You do want to look at all sides of things. Right now, this is just bearish, okay? We've been in this wedge pattern and we've broken underneath it. You can see here, we have this little trend line going down that we're still honoring a bit. And yeah, we're under the 200-week moving average. If we go out to the monthly, what do we notice? So the monthly moving average, the 100-month moving average, which is near this fib line at the 236 at around 141, that might be a possible area to buy. Now you can see here this fib line that we created from the prior high and low. You can see how Tesla before got under that 50-month moving average and wicked down just to about that 100-month moving average. So if it gets down to there, hey, if you like Tesla, I wouldn't fault you at all for getting some right there. It is at the 382 right now, or just a little bit underneath it. But if it got more bearish to the 141, cool. If it got underneath that, look out below. So you can see in the most recent, the monthly only goes so far, but it honors that 50 a bit. And then when it comes down to the 100, these have tended to be rare times to buy. So June of 2019 and late 2023. So just something to keep an eye on. Next, let's go to cannabis stocks. Now, I pulled up this article, and full disclosure, I am not invested in any marijuana stocks, but I'm going to show you a little bit of insight into how I research stocks, or at least one part of it. So I just Googled best marijuana stocks, and this was one of the articles that came up. And actually, an article that I didn't think was too bad, because not only did it talk about its top 7 picks, you can see here, it shows their returns as well. But it also talked about some financials with their balance sheets as well, which I like. Now, I've some friends that they kind of trade vest marijuana stocks, sort of like cryptos. They try to buy it when there's deep value and, sell it when there's a big pump with it. So, here are some of the top ones: Trulieve, Cannabis Corp, Green Thumb. I don't want to even sound in any of my videos like I'm giving financial advice, but especially when it's with a stock I am not in or a sector I'm not in, I don't buy any of these products. I just want to have full disclosure with that, because if you use a product and you like a product, you have insider information on that product, whether it's good or not. That is one of the best things you can do. So if you like your edibles or joints you get from these places, and you think their products are great, okay, that's one step closer to whether or not you even have the beginner knowledge to invest in one of these stocks. But one of the things I did, and you can do this too, you can go to marketwatch.com and type in any of these stocks. Now, I typed in Green Thumb, and when you go down to financials, you take a look at the balance sheet, and you can get really into the weeds on this stuff. One of the goals of my channel, and I named my channel Market Psychology 101 because that's the field I work in. And you guys have seen since COVID times how people in the field of science don't do the best job at explaining things in a way that's easily understandable for the public. I pride myself on trying to do that as best as I can. Anytime I'm talking about brain science and things with people as a consultant or helping out clients, I try to talk about it in a way that even a 8-year-old or a 10-year-old can understand. 5-year-old, no matter what, a lot of these things are going to be above their head, but I try. And it's not to be condescending, but I just want to talk about factors and phenomena and trends in a way that people can understand, in a way that relates to them, whether it's using analogies or whatever. But anyways, with getting into investing, it's one of the reasons I created this channel too, is because so many channels out there, they're either way over people's head giving great information, or they look at predictions and are giving really bad analysis on how to look at the market. So I kind of wanted to help in multiple ways with that. I wanted to show good analysis, good overview. I honestly try my best. I want to simplify it, and I want to use some complex terminology to and explain it in ways that are simple for people to understand. Anyways, go to marketwatch.com, type in whatever stock that you like. Okay, we're taking a look at Green Thumb. One of the easiest things you can do is just take a look at total current assets. Okay, that would be assets that within the next year they could sell and they could have this much money on hand. So $452 million. When these companies are bigger, it might say it's reflected in thousands, if we're taking a look at billions. Okay. So we have $452 million. Now, one other thing you can take a look at, this is year by year. You can see how there's some growth, and then it's stalled the last couple of years, whatever. And you can see that reflected right here. So total current assets, and then you scroll down to liabilities. And again, you type in the company, go over to financials and balance sheet. All right, that's how I got here. Now we go to total current liabilities. And here we have 166. And again, we're taking a look at the trend. Okay, the liabilities were going up, but then they've come down. As far as why that is, do your research. Looking at the balance sheet is one important thing, but read up on it. Read up on why that is. What's going on? Why are they trying to reduce their liabilities? How is that affecting their assets? Because they have a similar chart with the assets as well. Right, so we have 166 in liabilities. We're going to take total current assets, which is 452. I'm just going to round up there, divided by 166. That gives, I'm doing this on my phone calculator, that gives us a ratio of 2.7. Anytime a stock has a ratio above 1, to me that's good. I don't like it to be under 1, because should there be a big recession or things go bad, those companies can get sold, liquidated a lot easier. Should a company be above 2, that's really good. And above 3, that's great. So right now, this balance sheet, to me, is looking pretty good. Okay, so we have, again, total current assets, and you can get way more into the weeds on this stuff, as far as, what does goodwill mean and all that stuff. I can explain that in another video if you guys want, but for the sake of what I'm trying to do on my channel, I'm trying to simplify it, okay? The quickest thing you can do, just total current assets divided by total current liabilities, okay? That's even why this website highlighted it, because they know how important that is. Let's go to a couple different ones. Let's go to a good looking one like Google. Okay, I know this is going to have something good. It's probably going to have a ratio above 3. So again, we're going to go to financials, scroll down again, balance sheet. All right, a little insight on what you can do. Total current assets and okay, it does reflect it in billions. That's good. 171.53 billion divided by total current liabilities divided by 81.81. So that's actually a ratio of 2. So I believe Google has been as high as 3 not too long ago. You can see back here is like 45, 56, 64. And if we go up, yeah, here it would have been ratios of 3. Okay, 64 divided into 188, that's 3. 45 into 152, that would have been 3. So the higher that ratio is, the better. That way, should we get another recession, kind of like I showed you guys before, that is a way to look at possibly, companies that are most suited to survive. Now let's think of a company that's been somewhat negative, or people have been talking down about recently, Rivian. And again, go to financials, and you can do the calculations yourself. If you don't believe, the trust me, bro, numbers I'm giving you, I promise it. I'm giving you the accurate numbers. So total current assets, 12.31, divided by what's its total current liabilities? 2.4. Okay, that's actually 5, which is crazy. 7.24. Yeah, Rivian, newer company. It's, what it is its earnings are way down. So as far as where they're at right now, yeah, you can see cash and short-term investment growth are negative. They're still negative. They're hoping for things to turn around down the line. Okay, here we go. Earnings. Yeah, the earnings are really bad. That's what it was. So this is a newer company. Sorry, bad example. I'm trying to think of one that's maybe better. Maybe an airline. How about Delta? Because I think they have earnings coming out pretty soon. Now there's a few different deltas here. I'll get back to the marijuana stocks here in a second. Delta stock is DAL. There we go. All right. I'll get back to the marijuana stocks, but I'm just trying to prove a point. With the newer stocks, okay, maybe you have to take an even closer look in the weeds. So Delta stock, okay. Total current assets, 10.27. Here we go, right? This is perfect. 10.27 divided by liabilities, 26. All right, so this is just under 0.4. Like I said, not so good. So that is one of the quickest ways you can look at it. Obviously, with newer companies like Rivian, I apologize, bad example, but just something you can consider. Okay, if it is a newer company, yeah, then take a look at the earnings. What are the earnings at? And even on sites like Robinhood, they'll show you that. They'll show earnings, how it's trending. Those are pretty good. So we talked about Green Thumb earlier. Let's take a look at Trulieve, because I believe, yeah, here it showed year-to-date returns. This one's looking pretty good. Okay, we'll do Trulieve and then Verano and then be done. So TCNNF, go over to Market Watch, and here we go. TCNNF. Okay. How long has this one been around for? And again, we can go over to the charts as well, balance sheet. So there's a couple ways to look at it. Let's go over here. I'm trying to educate you guys too, so you can go over this stuff as well. IPO, when did this IPO? So this is another relatively new company. So again, you might need to take a look at earnings. $2.34 billion market cap. Yeah, earnings you can see, man, it was down pretty low, but overall not great yet. And as far as total current assets, 630 divided by total liabilities, that ratio is really good. But again, we want to look at other things too, as far as earnings. Okay, that's not looking so good. So you do want to take a look at some of those other factors. Now, sure, going back to the chart, if you're just exclusively trying to look at the chart, and see where are we at right now. Well, weekly, we have the 200 week at a resistance, and within the last year, we are at a yearly high. So would I be buying this? No. And here you can see we have a daily sell signal. Um, but, cannabis stocks, for as long as I've known them, have made me nervous just because they are really new. Um, at the very least, like I talked about, you can buy some of the monthly buy signals and you wouldn't be in the worst shape. I mean, here's the IPO. I don't like to buy any stock or crypto altcoin if it's within a year or two of when it came out. So, if you bought one of these, sure, you'd be just above even right now. Look at this monthly sell off. My God. So, yeah, 90%. So, again, if it's a more established company, you can, I think the charting and the balance sheet stuff shows more. Otherwise, when it comes to newer stocks, you do want to take a look at the earnings as well as what's the trend of the expenditures? Is it going up or down? Now it peaked here, and it's been going down a little bit for the liabilities. I want to see it. Now I'm going to get into the weeds here a little bit. I apologize. Um, Bad debt, nothing I can't manage here. I just want to take a look. Like the assets went up and then back down. So, I'm curious to see if the assets keep going down. You can start taking a look at the quarterlies, get more into the weeds there. Short-term investment growth, that's been negative too. For me personally, too early to tell. And the charts for cannabis stocks, anytime I've looked at again, this reminds me of crypto, where it can go up a 5x, in a short time, and then hey, sell, and then wait for it to finish its monthly move at the very least. Last one, and then I'll close this out. Thank you for humoring me. This one has a pretty good year-to-date return. Vernoff. Okay, let's take a look, see what we got. And all right. So again, financials, balance sheet. Take a look at a couple things here. So this one looks, this company again is a relatively new one. As far as short-term investment growth, okay, looks somewhat promising. That's insane. But again, that's just right when it started. Bad debt, that's not good. But all right, here we go. Total current assets. So 520 million that they could have within the next year. This accounts for other assets that they wouldn't sell to make money off of within the next year. Things such as their buildings and other sorts of stuff. You can get more into the weeds with that. Depreciation, obviously, just the value of what they have and where it actually is. And then liabilities, 534 million. So you can see here the liabilities are more than the assets. So the last company I showed you had a high ratio. The Trulieve had a very high ratio. So maybe it's more of a promising one than I'm giving it credit for. VRNOF still just makes me nervous buying some of these or considering it. I wouldn't. Oh my God. So you see this IPO. We had a monthly buy signal, most recently down here at 3. Let's go to the weekly. We have the 100-week moving average as resistance. And it's got a market cap of 1.6 billion. So again, guys, these are just a couple ways that you can take a look at stocks. I do recommend researching the company taking a look at its earnings. This earnings trend is not good. Obviously, it's going down. Never a good thing. Is the earnings trend going in the right direction? Is the total current assets going in the right direction? Here you can see the liabilities. It's right. They're at around 500 billion, and as far as total current assets, that is going up, so that's good. But when you're investing in these, you are taking a look at longer potential and you're taking a bigger risk. So I hope that helps. Um, if there's any specific stocks you like, type them in. Do your research. Okay, do lots of research. Don't just research it for a day because you heard about it from a friend or a family member and then buy it. Research it multiple times, come back to it, look at the good and the bad. Here at Market Psychology, I'll leave this video on this note. Sorry, this got long-winded at the end here when I got into this section. We want to remove our biases as much as we can. So if you're feeling really good about something, you want to look for the negatives about the company, reasons not to feel good, okay? And vice versa. If you're feeling a little hesitant, you want to take a look at both the good and the bad. You want to take a look at stocks as if you were a robot because, again, the people in Wall Street, they're making money off these based off algorithms more than anything. They try to remove emotion as much as possible, and that's why smart money typically does the opposite of what dumb money does. So do try to remove your feelings and your bias when it comes to these, at least somewhat, and do your research. Check the balance sheet, and I gave you a little bit of insight to go there. If you guys want me to check the balance sheets and go deeper into that more often, let me know. I'd be happy to do that. I worry about doing that for the sake of this channel because I don't want to talk over people's heads too much. I want my content to be digestible for a casual viewer. And, if there's more research to be done, I want that to be something done on your end. So anyways, yeah, hope you guys enjoyed this video. Hope you're all doing well. Have a great day. Bye-bye.